Thanks everyone for coming to this virtual conference. This is my first time participating in one as a speaker. I'm pretty sure I'm going to fuck it up a couple of times, but I will do my best to keep it entertaining. And we have a good panel. So we have theoretically Kyle Samani is here or joining us, I assume from Texas. We have Aaron McDonald from New Zealand. We've got Robert or Bob Westcott. Rob, sorry, Rob. See, he told me to call you Rob, not Bob. In DC, and Brock Pierce is, I assume you're in Puerto Rico.
I am.
What I'd like to do is give everyone a chance. We have 45 minutes. We got a lot of time. We're going to keep this entertaining, but I want to give everyone a chance to introduce themselves for a couple of minutes each. And why don't we just start off with Aaron?
Yeah, hi everybody. Aaron McDonald here. I'm a founder of Centrality Investments. We're a tech venture business. We have about 30 portfolio companies, quite heavily skewed into the digital asset, blockchain, DLT space. Based down in Auckland, New Zealand. We have a team down here of around 50 people who are working on a range of things across those ventures. Good tech research team down here as well, about 30 engineers that are building cool shit in this space.
Great. Robert?
So I'm Rob Westcott in Washington, D.C. I'm the founder of Keybridge Research. We're a economics and public policy research firm. I'm the odd man out in this group. We're not digital asset experts or anything, but we do bring a perspective on monetary policy. Part of my career was in the Federal Reserve System. Part of my career was at the International Monetary Fund, and we have clients in the financial space, corporate space, and we think about things like QE and what it means for business. We think about things like how do you get money into deserving people's hands. And so I'll give some perspectives a little bit on how new assets, digital currencies, and so on can, what the interplay is between them, and let's call them legacy currencies, okay?
Robert, are you a communist? That sounds a little bit like you're a communist.
I'm not a communist. I don't even believe in MMT, but we seem to be getting MMT these days, whether we wanted it or not. So we can talk about that.
Yeah, whether you believe in MMT or not, it seems to be happening right in front of us. So, Kyle, welcome. Thanks for joining us. Are you in Texas?
Hey, Mike. Good. Hey, everyone. Glad to be on here. I was having some technical problems. Sorry, but I am at home in Austin, Texas.
Great. And thank you for passing on the monitor or moderating this panel to me last minute. That was great of you. Kyle, why don't you give us a little bit of background about you and your fund?
Sure. Hi, everyone. I'm Kyle. I'm a co-founder and managing partner at Multicoin Capital. We're a thesis-driven investment firm based in Austin, Texas, and we invest across the full kind of stage of crypto, all the way from seed, all the way through Bitcoin and everything in between. We run two funds, a hedge fund and a venture fund. Hedge fund on public markets, venture fund private markets. We manage more than 100 million across those two vehicles. Our team is distributed across the U.S., Texas, New York, and California, as well as in Beijing. So we spend a lot of energy really trying to bridge East and West and understanding crypto is a very global market, and so we really work hard to try and bridge both sides of the Pacific Ocean.
Great. Brock?
Yes, I am in Puerto Rico, and I've never been more productive. We were the first state or territory in the U.S. to be on mandatory curfew, quarantine, can't be out after 7 o'clock. Based upon your license plate number, you're only allowed to be on the road 3 days a week. And so I find myself just working day and night. We just announced today that the news came out, working with Binance Charity, our foundation down here in Integra. We just we're facilitating $1 million donation of masks to first responders here in Puerto Rico, as well as in a number of other Caribbean countries. You can also check out feedpuertorico.org. A lot of people haven't been able to work for 6+ weeks. We're buying food from farmers, and we're giving that to families and individuals most in need. I guess by way of background, I came from the games industry, making markets in digital currencies prior to Bitcoin in the crypto space. A few accomplishments of note. Started Blockchain Capital, which was one of the first venture funds in the space, arguably the first. was a co-founder of Mastercoin, where we invented the ICO, one of the founders of Tether, where we created the stablecoin concept for Blockchain Capital Fund 3 with BCAP. We did the first ever security token. And then at Block 1 at EOS, we did the largest ever ICO, been involved in many other projects, both as a founder, advisor, and investor, and continue to do all I can to support this ecosystem's development. And grateful to Wave Financial for facilitating this. I know a lot of us are feeling a little lonely with no social lives, so it's good to find ways to bring us all together and hopefully share valuable insights. Thank you for tuning in.
The sense that you're an extrovert, so this must be hard on you. For those of us that are introverts, it's like it's just perfect. I mean, I'm sad that whatever's going on. What's that?
Well, I'm finding I'm very productive as a result of this. So yes, I'm a social butterfly and I enjoy being social and connecting with people. But it's nice to have all of this time, not on airplanes. Waking up in the morning, work, well into the evening, and also to focus on, other things that, we tend to put off. Get your house in order. I don't mean that just literally. I mean that figuratively. I'm getting a lot of work done just on a personal perspective, a lot of like dirty laundry that's getting cleaned up that just I've been neglecting for a long time. And so I'm grateful for all the time and the productivity that's resulted in it.
When you say dirty laundry, do you mean literal dirty laundry, or do you mean more figuratively dirty laundry?
Well, I mean, it's organization in general.
So it's both.
I'm doing so many things. I'm normally juggling so many balls that there's a lot of stuff that gets left unattended to, a lot of I's that haven't been dotted, T's that haven't been crossed. I'm just kind of going through and cleaning up. I've left a lot of messes behind me by doing too much. And the nice thing is when this is all said and done, I'm going to be really well organized professionally and personally as we return to a new normal, something that's hopefully much better than the normal that we all lived in.
Well, good for you. And honestly, good for you for all the charitable work you're doing. And I know you've always done a lot of charitable work. And so congratulations. I also have been very busy, similar to you, although instead of helping people and getting work done, I've been watching maybe 12 hours of Netflix a day. So I feel like it's a very similar experience, and we're both getting equal amounts of good work done. So,
well, and those 12 hours of, call it due diligence, any insights or recommendations for us so that we can do an hour a day and feel as fulfilled?
Great, thanks. You're always a glass half full kind of guy. Thank you for that. So, I don't know if Kyle is. He turned off his video because he wanted to put pants on, or I don't know what's going on. But Kyle, I'm going to assume you're still here. But I'm going to not go to you yet until I get that confirmed.
I'm here.
Robert, you're here?
Yeah.
Oh, okay. Just you realize your video's not on.
Can you guys not see me moving?
No.
We just see your silhouette.
And that's totally fine. Like I said, if you're changing clothes, putting pants on, taking them off, like do whatever you want to do, but at some point come back to us with video. Robert, why don't you start? Pardon me, Kyle?
I said apparently it's fine front stage, so they can see him front stage.
Oh. Interesting. I can't. Okay, cool. So, Kyle, I guess we can't see you, or at least I can't, but everyone else does, which is fine with me. So you are wearing pants then. Good. Robert, I think you had a few minutes you wanted to talk about global monetary policy post-Bretton Woods through QE. I think that should be very timely. So why don't you jump in and just...
Sure, Michael. I think just to set the scene here, think a little bit about where currencies are coming from and where we've been. They're a store of value. They have to have credibility. They have to facilitate financial flows, credit flows. They have to facilitate trade. They have to facilitate asset accumulation. Those are some of the things that we want money. That's some of the reasons we want money for. Since Bretton Woods, World War II, there have been four big regimes. One was the gold standard, and so that was, that worked well until 1970. Then that broke down. Then we went to reserve targeting in the 1970s. That broke down. We then kind of got the golden era of the post-war period in the 80s and 90s. That was Alan Greenspan and let's call it Federal Reserve Fed funds rate targeting. And so that was kind of how we made monetary policy. And everything was working pretty well then. If that had just continued, there may not be as much demand today for new experimentation and new types of assets. But in the global financial crisis of 0809, we had the Lehman crash. And ever since then, we've been worried about secular stagnation. So that brought QE, QE1 and QE2 and QE3. And so, suddenly we had really slow growth and we had trouble getting money out the door and getting money into the right people's hands. And so that caused a lot of problems. And now we have the virus come along, which has just led to a global collapse. So we're now in the middle of the worst. We're in the middle of the worst economic period since the Great Depression, and actually the second quarter of this year around the world is going to beat anything we had in the Great Depression of the 1930s. So, we now want to do. In the U.S., we've done $3 trillion of stimulus packages in the last 6 weeks and counting. We'll probably do another trillion sometime in the next 2 or 3 months. And so this has raised new opportunities for. We start thinking, how can we get money in people's hands? How can we get money out the door quickly to the right people? So, I think the timing is good for new technology to try to provide some solutions for some problems that we now have. So let me stop there, Michael, and you guys can chip in and fire questions whenever you like.
I have a couple questions. You've said that you want to get money to the right people as opposed to the market deciding where that money should go. And that's a fair enough statement in the current situation. But you actually said that before the current situation, you were trying to figure out ways to do that. And this goes back to the whole communism claim again. And so what is it that you believe? Because in some ways, I believe in crypto because I think that all the things that government is doing now is the problem that crypto solves. And it seems like you're trying to use crypto to do the things that government's doing in a better, more efficient, more communist way. I just want to understand what your thoughts are there.
Yeah, so I do think that I believe in government, and so I think government has a job to do in everything from solving health problems and getting scientists to come up with vaccines. I think those things are good. I think the government has a role of setting the rules of the game for investment and for safety of companies, or let's say accounting standards. I believe in all that kind of stuff. So I have no problem kind of accepting the status quo that it has, at least in much of the post-war period, it has delivered the goods, has delivered rising living standards. So I don't have a problem with that. The key thing is we're trying to get money into the right people's hands. So right today.
There you go again. What does that mean again? What does that mean?
Well, it means that we have 30 million people have become unemployed in the U.S. in the last 6 weeks, and it means I want them to be able to pay their rent. And if we're gonna spend $1 trillion, I want to at least protect those people so they can get enough food to eat. Yeah. And I don't really want to give the money to someone who, let's say, is a rich fat cat anyway and has millions in the back, in reserve. And if I give money to that person, I'm probably not really stimulating the economy. I'm probably just diverting resources from something productive.
You said that you think we're in the worst financial situation since the 1930s, meaning that your opinion is this is worse than 2008, it's worse than 87, it's worse than 2000. We struggle with this same issue all the time. Do you have any evidence to support that, or is it just your gut feeling at this point? Because we may not know for another year, right?
No, I'm talking about the worst economic performance. So we are going to have an unemployment rate very quickly of 20% in the U.S. And the worst we ever got since World War II was 10.8% in 1980. We got to 10% during the Lehman crisis. And we're going to be at 20%, probably right now we're at 20%. So I think that's pretty clear that we're in the worst economic situation since the Great Depression.
Okay. All right. Kyle, I want to give Kyle a chance to speak for a couple of minutes on non-sovereign money, and then we'll just keep absorbing all this information. We'll take feedback from the chat, and then we'll have our discussion around this topic, I think. So go ahead, Kyle.
Yeah, I mean, what excites me the most about crypto is that it's our first chance to take non-sovereign money and actually make it work globally. Um, gold, gold works as non-sovereign money because there's a fixed amount of gold atoms in the crust of the earth. There may be some in asteroids and stuff that we don't know about, and maybe we can mine that later. Who knows? But at least for now, like there's X number of fixed atoms in the crust of the earth. We don't actually know how many atoms there are, but like there are some number of them there. And so it provides some nice scarcity. But even beyond that, gold is like not practical, right, for usage. I mean, like carrying around gold coins is heavy. Breaking them up into smaller pieces is hard. You have a lot of physical security problems if you want to carry around a bunch of gold coins. So for a lot of pretty obvious reasons, this gold is not easy to use as an actual form of non-sovereign money. And that's why we've seen throughout, since the 1400s, really, like you started the rise of paper notes with the Medici family in Italy, and right, like you have a whole history of finance since then on paper notes. And crypto represents our first chance to have non-sovereign money that is scarce, but you can actually transact with it because it's digital. You get the nice properties of being digital. You can break it up into small pieces. You can carry lots of it around, and store it in your head. And I think that's a real breakthrough. And I think that actually expands the market for non-sovereign money. So like today, the market cap of gold is like 8 trillion or 10, maybe it's 10 trillion now with the recent run in gold, but it's something in that kind of range. But if you think about it, the people who need non-sovereign money the most are the people who can't access it, right? So if you live in Venezuela, if you live in Argentina, if you live in Lebanon, if you live anywhere, then you don't trust your fiat currency of your government, right? Like, are you going to walk around with a whole bunch of bars of gold? Or do you have access to U.S. capital markets where you can buy GLD, right? Or like buy securitized gold in a vault somewhere that you can trust? And those people typically can't. And so what I find most interesting is that the market cap for gold today is, call it 10 trillion plus or minus, but like it clearly is undersaturated relative to what it could be. And I think by crypto being natively digital, it's kind of very clearly market expansionary. Does that expand the market 2x or 5x or 10x? I don't know. But it's pretty obvious to me that that's a meaningful amount of market expansionary power. And I think that opportunity for crypto will be the single largest kind of new wealth creation that the crypto will have over the next 10 or 20 years.
Okay, great. I want to give Aaron Rock a chance to jump in as well. Obviously do it any time, but if you have any thoughts on either of these topics, I have a million thoughts.
I think if you combine what Robert's saying with what Kyle's just said, I think it's important that overall money supply is upgraded. I think that's a really important thing because we're starting to see the weaknesses of the money infrastructure impact the way that monetary policy can be implemented. If for example, in whatever side of the coin you're on, whether stimulus is good or not, or whether, communism is good or not, giving people money to pay their rent or buy food for their children, so that side has kind of got some really big issues now. You're seeing, the systems that support that money being inadequate for the job. At the same time, we live in an increasing digital space, and gold's primary function is storing value. It's not a huge utility relative to its stored value, and so if we live in this digital age, then we should have digital stores of value, and they can exist side by side, and they probably will. I mean, for all of the goodwill and the want and desire that we have as a crypto community, we live in a physical world with governments, with tribalistic tendencies to support different kinds of standards, with political motives, with economic motives. And so those things can exist side by side, and they probably will. But definitely in the camp of store of value, Bitcoin seems to be the leader in transitioning to a digital global store of value that is a better kind of store of value. And we start to see the same thing happening in fiat. And those things have to work together. We all know the reality of the Bitcoin market is supported by the fiat market, and we need these increasing digital forms of fiat to drive adoption into crypto long term. Even if we believe it is a global universal currency in the future, you have to have ways to get people and onboard real money into this, because someone's got to pay the electricity bill at the end of the day. So, the two need to evolve side by side, and probably more now than ever, given the fiscal decisions and policy making that has to happen to get us through the period of time that we're going into, as Robert's discussed earlier.
Aaron, you just referred to real money. We need to get real money into the system. I think you were referring to fiat when you said that, right? Fiat's the real money?
For now.
So you're off stage. We need to kick you off stage. How do I do that? How do I just we'll get back to that. Brock, what do you think about?
It may not be good money, Michael, but it's real money.
I'm going to add
and buy a coffee with it. I can pay my rent with it. I can invest in companies with it. Like it is idealistic to assume that Bitcoin is the real money, and for now
But aren't we all idealists? I mean, aren't we? I mean, just like I'm an idealist.
Right? I'd like to say that I'm optimistic, but I'm also a realist. I live in this world that exists today.
Yeah, disappointed, but we can move on.
So a couple things I would add. Clearly, if you're going to have forced or mandatory quarantine and deprive people of their ability to work and make money and pay their bills, I'm in that environment. I support giving money to people because you kind of have to. You can't tell people you can't work and starve. And so I am supportive of this $1,200 sort of stimulus package. And one thing I'd like to point out as a parallel is it's kind of something that reminds me of something we see in the cryptocurrency community. It's the largest airdrop the world has ever conducted. It's literally, they've taken a page out of the, call it the cryptocurrency ICO playbook. And I'm not sure we've ever seen anything else quite like that. So I want to point that out. Another thing I think worth noting as we talk about a store of value is that Bitcoin, which I would have argued is more like a gold or a gold 2.0 or something that is on its way to being a store of value during this market crisis, is actually performing more like a stock. The crypto prices dropped, or Bitcoin prices dropped in line with the equity markets, though it didn't get the run up that the equity markets have received because of, call it the Fed printing massive amounts of money. I would argue that the stock prices today the stock market is now imaginary in the sense that it's almost entirely artificially inflated due to very cheap capital, low bond is funneling where else for it to go. And unfortunately, cryptocurrency has been correlated with the equity markets and not things like gold, which I would have hoped that during this sort of market, we would have seen Bitcoin performing more like gold, though maybe that's what we're starting to see with the performance over the last couple of days. Hopefully when this is all said and done, that Bitcoin prices will be higher than they were prior to this crisis. And so we'll see. But those are just a couple of, I think, interesting data points as we're looking at what's happening here and how what the parallels are, or the insights that I've at least kind of taken away from this. But long term, I think that that's where we're going. And I think that also means that maybe a lot of the Bitcoin holders or hedge funds or family offices, the same sort of people that were holding large amounts of equities, and when they made the decision to divest equities as we were going into this crisis, they were divesting Bitcoin in a very similar fashion. I'm not sure what the takeaway there is, but clearly we're hoping for an asset that is not correlated with equities, and right now it appears to be.
Okay. This is a panel. I love just the basic monetary theory discussion. I think it's an interesting, eclectic group of people here to talk about it. This panel is technically about investments, and I assume that meant investments in companies and new projects and platforms. So I would like to spend a couple of minutes talking about that. And one of the things I like to ask people, and I get different answers on stage than I do privately, is to the extent you're investing money on behalf of third parties, and I think everyone here is, except Brock, right? Are you investing third party money, Brock? You're so rich, I'm not sure it matters to you anymore, right?
I'm not investing as a fiduciary on behalf of any firms right now. I'm not active in management at Blockchain Capital or at EOS VC at this time. So all of my investments are personal, and I am actively investing. And the one benefit of not being a fiduciary is I can move a lot faster. And I provide, I'd say, a lot of the same strategic benefits that institutional firms in the space do. Also, as a limited partner, I'd love to just separately have a call with each of those of you that are managing money. I am, always looking to at least be a small limited partner in the firms that have good fund managers. Because I'd like you to be able to deploy some of that capital. I'd like to be able to connect with you on a regular basis to understand how you're deploying that capital, understanding what I can do to support, call it those the best portfolio companies or token projects. I live my life in service, and I'm, here to be helpful and create win-win scenarios where we can all do well together.
I forgot what I was talking about. Investing in stuff. So, and also Brock, before I got to know you personally, I'd see you talking in public like you are now, and I'd be like, that guy's full of shit. Like, I know when I meet him in person, it's going to be this Dr. Jekyll, Mr. Hyde thing where he's like the evil capitalist behind the scenes, but you really are like, to the extent I don't agree with everything you say, but you are exactly the same person, whether a camera's on you or not. And I appreciate that about you. All of us, though, are investing in things, and whether it's our own money in Brock's case or other people's money or a combination, how do you justify to yourselves and your investors that you can actually outperform them simply investing in Bitcoin and doing nothing else? Like, how do you say you're going to outperform Bitcoin? Because I have trouble with that.
That's a really good question. I don't know if that's always the question that investors ask. Some investors aren't.
Some investors don't even know how to buy Bitcoin, right? And they need us more as custodians than anything else. But I still think it's important we ask ourselves that question: are we actually able to outperform Bitcoin? Is there any real chance? Are we providing some kind of hedge?
I think there's two answers to that question. One is, if you only invest in the currency and not the ecosystem, then are you really building something that's got sustainability and usability in the long term? Like, you have to invest in the things around Bitcoin for Bitcoin to be successful. So even if you have a long Bitcoin view and you want returns out of that, you have to assume that it's going to take investment in other things to make that happen. And the second thing would be, going all in on one thing probably would be bad investment advice, and particularly in a volatile asset, with early days but promising days, going all in on something, you'd be a bad fiduciary to do that.
One answer that I'd be looking for here, just to jump in, is when Bitcoin goes down, when the market goes down, sometimes third-party investors can actually do quite well. And I know, Kyle, in 2018, and all of us have fond memories of 2018, your fund supposedly, according to leaked numbers, which I'm sure didn't come from you guys directly, but that you guys in 2018 were only down like 20-something% or something like that. I might be misremembering, but the overall market was down 85-90%. And so there's an argument, I think, there. Maybe I don't want to put words in your mouth, but that you can actually, over time, outperform Bitcoin because you're actively managing the money.
Yeah. So we did outperform quite substantially in 2018. I think that is kind of one of the key ways for active management to shine in the space, is in those kinds of scenarios. We had high conviction that we were in a bear cycle, and we hedged the portfolio meaningfully with shorts, as well as we grossed down a little bit. We're still exposed to the market, but much less so than we have been previously. When we think, so that's kind of one way to think about downside is, and we spend a lot of energy kind of quantitatively understanding where are we in the market cycle, and then positioning kind of our net exposure. We generally don't make those decisions frequently to readjust the net, but we do over long periods of time. And when we make those transitions, we make them typically with pretty high conviction, and then hold them for some period of time before changing again. The other opportunity around performance is asset selection, and it's again we like to think slow. So when we come out with views, and we're relatively well known for publishing our theses online, we like those to be typically super, super high conviction views that they're going to outperform. So the last one we did that for public markets, for an asset that's in the public market specifically, is for Binance. We've been very, very vocal that BNB is going to be a superstar returner. Since we kind of went public with our view that Binance has been basically the top performing large cap asset by a pretty substantial margin. And the more time that goes by, the more convicted we are that they have a very clear path to becoming the dominant global retail venue for trading crypto. They won't. I'm not saying they're going to displace Coinbase or CME or anything. I don't think that's going to happen. But I think on a scale of billions of people, Binance is almost certainly the best positioned to capitalize on that, and they have the network effects and they're executing. And so we like to put on those kinds of positions, and then we typically double down on them and hold them for a long period of time. And we still have a very large BNB position, and we expect to for indefinite future. So there are opportunities, but it's difficult. Certainly, we feel the stress every day of how do you outperform Bitcoin. But in some months, obviously, we underperform when volatility works against us. But we've been able to outperform very well with super focus on deep asset selection.
Hey, Michael, the overall environment is important, and I think just the reality is that a big bulk of the global assets under management are looking for stability right now. I mean, we wiped out $8 trillion of market cap in the stock market in the last 6 weeks. There's been some partial restoration, but we're still down about $6 or $7 trillion. And so I just think the reality is that there is a lot of money is looking for stability. People aren't necessarily looking to hit a home run, and I think a lot of people are like, let me just ride this recession out. Let's get into June and July. Let's see if we get some stability of the economy. And so I think that is just kind of the reality that's probably under some of the demand for digital assets. I'm curious for any reactions of the other panel members.
So, I mean, one thing I would add, I'm also a shareholder in Wave that's putting this on. As I look at kind of my crypto portfolio, I mean, first of all, I want to look at my overall asset allocation and understand how much exposure do I have to cryptocurrencies, to private or venture type equities. I'm also a buyer of gold and silver right now. I own 40% gold, 60% silver. And that's because the silver ratio relative to gold is at, near all-time lows. We've only been here about 3 times in the last 100 years. And so if gold and silver were to move up in respect, we'll see silver will have a higher return relative to gold. Other things that Wave does for anyone that holds Bitcoin.
Brock, where do you put your gold and silver? Like in your backyard, and do you bury it, or in your house?
Right now it's stored with JP Morgan in London and New York. But yes, some of it I keep like junk silver. Like I buy silver coins that are not like high quality collector's edition. I buy junk. The best thing to do is to actually go to like pawn shops and gold stores and buy the coins that are not in mint condition, because you don't want to be paying a big premium. You want to get the lowest markup over spot. You want to get the lowest markup, but you still want those in denominations and in instruments that would be very useful. And so, there's a lot of ways to do it. I have a strong preference to physical gold, whether you have it in your possession or vaulted, over call it paper gold, things like GLD. I've got major concerns that there's not enough gold out there to meet, call it the paper gold positions. And if ever a major crisis were to hit, I think that your paper positions are going to be at risk. Other things that I think if you hold things like Bitcoin, a big thing that's happened is we now have, decentralized finance, or at least fixed income coming off of crypto positions is very real. Right now you can make, as of 2-3 days ago, 7 to 7.5% interest on your Bitcoin positions and lending it out. The fact that digital gold or things like Bitcoin now can provide a fixed income type yield, I really think changes the profile of the asset class. One of the problems with holding things like gold is it costs you money to store it, even if it's in your own home, right? It's taking up space to some degree. And so I think that's another thing that everybody should be thinking about in general. If you're giving money to an asset manager, I do believe there's value in it. I'm a limited partner. I'm a supporter of these things. And you may want to take some position of, call it your Bitcoin holdings, and give that to active managers. that can diversify that position. I clearly wouldn't recommend giving all of it there, but I do recommend having a diversified portfolio. I do recommend having asset managers. Certainly, I'm a big supporter of venture capital. I remember when we were starting Blockchain Capital, I was going around to a lot of the biggest Bitcoin holders that I knew, and all of them were like, no, I'm just going to sit back on Bitcoin. Why would I want to invest in companies? I'm going to get a better return. I'm like, well, but those returns won't happen if we're not investing in these companies. And so I used a lot of my money, a huge percentage of my money, and begged as much as I possibly could for people to contribute. And most of the people that invested with us were not large Bitcoin holders. I was very disappointed by most of the people I met and how little they were willing to do to contribute to the ecosystem's development, which is what ultimately created the prices we all have today. And so I do recommend to everybody, even if it's a very small amount of your money, create an angel list account, invest in an IEO, do something to give back with the abundance you've received to support the ecosystem's overall development, even if it's just 1% of your position, because it does take teamwork to make this collective dream work. If we do want to build and we want to see a better world, we actually have to get involved and we have to do something. And it does, and every little bit helps.
It does take teamwork to make this collective dream work. That's my second favorite quote. My most favorite quote from you today is, "The stock market is now imaginary," which I think is awesome as well. One of the earlier questions in the group chat, and it's way up top, but I made a note of it, was, if Bitcoin becomes too successful, what happens when governments, particularly the U.S. government, says no and tries to stop it? Is that something that you guys as investors worry about? The extent that maybe they can't kill it, but they could hurt it enough that it becomes a bad investment?
I think you have to say that success ultimately depends on them not being able to stop it. Like, you can't have one without the other. If it's stoppable, then it's not valuable and it's not successful.
For them to stop what you call real money, or I call fake money, it's very easy for them to stop that, right?
And it would kill crypto if that happened.
Well, so I think that we're already seeing that. And so the government responses to, call it, the success of cryptocurrencies like Bitcoin, and also the enabling of the underlying technology in blockchain, we're seeing that with China. We're seeing that with governments around the world. We've even seen the US talk about the potential of digitizing its currency. If you saw the original business plan that we had for Tether, the idea was that we were going to create a digital dollar to demonstrate to governments and central banks around the world that they could utilize this type of technology to create financial inclusion and to create greater efficiency in the world. And I don't think that Bitcoin or cryptocurrencies is going to do away with fiat money. I believe that we're creating two parallel systems. And what's going to happen over time is members of, call it, the mainstream or Main Street, are going to become more and more aware of some of the challenges that fiat monetary systems have and the resulting inflation. And more people, as they become aware of those issues, because it's still not in the general zeitgeist, are going to go out and buy some gold and they're going to buy some Bitcoin. And as they see how those asset classes perform on an inflationary basis relative to things like the US dollar, we'll slowly get more and more participation in, call it, this parallel financial system that'll exist. And it will take many years before we'll see what the impact of that is. But we're going to have two systems that run in parallel for a very long time.
It'll be an education, essentially, for people in how do digital currencies work. And that in itself will drive them into understanding Bitcoin, and then potentially understanding the value of Bitcoin in terms of monetary terms. You've got to understand the vast majority of people don't even know how their money works today, let alone trying to figure out how Bitcoin works.
Robert and Kyle, I want to get you guys involved in the conversation here too, particularly Robert, because we're talking about the whole financial system, the whole monetary system. And so I know you have thoughts on this. Robert, also, you look highly amused, and I'm just wondering if you're like watching, are you watching this, or are you like, is something else going on? Like, you have the TV on? Like,
I'm watching NBA games.
Reruns?
Reruns, yeah. No. I actually think I agree completely. There are going to be parallel systems for quite a while, because people have to get used to the asset class. They got to see what it feels like, and they got to see that they could go in and out, that they have points where they could get money in or out. They could swap money back and forth. And I think that's actually very healthy because I think it's like building confidence over time of these assets. And the only other thing I will just say is there are, digital currencies are goring someone's ox, and there are lobbyists in Washington, in my city here, who will take money from certain institutions who will lose if there's a increase of digital currencies and assets, and they can pay people to go and talk to congressmen and senators to put up obstacles along the way. So this is not going to be a completely smooth path. I mean, Joseph Schumpeter talked about creative destruction. It's like the old guard doesn't give up easily, and you guys are going to have to fight to overcome some of these obstacles. If you're technically better and you have superior performance, that's you're well on your way to winning. But it's going to be a process, and I think there will be parallel tracks for quite a while, and I think that's actually good and healthy. I don't think you should be scared to say not everyone goes to digital currencies like tomorrow.
We still have a couple minutes left. Kyle, you want to wrap this up for us with any last thoughts? Also, Kyle, are you working out? Because you're looking bigger than ever, and I don't understand if all the gyms are closed.
I have not been lifting recently, man. I've been stuck at home. I can ride my bike in Austin, but that's all I can do. But I'm a little flattered. Thank you. Just trying to stay alive. So I agree with kind of the comments from everyone else about these systems will run in parallel for some time. I think that this is the first crisis that I have experienced as an adult where I no longer believe what I read in the news. And I don't mean that the people on CNN or in WAPO or New York Times are intentionally trying to manipulate me. I think by and large, the authors of the editorials and even just the news pieces are not trying to openly manipulate us. But I've just realized that because the crisis is so kind of fundamentally unknowable of how many cases are there? What are the symptoms? What are the comorbidities? We don't know. The fact is we don't know these things, but all of these institutions are incentivized to project some level of confidence about what's happening. And so because of that kind of fundamental dichotomy, you have people reporting things that are being then taken as fact by a large percentage of the population. And the more of it I read, the more conflict I realize is there. And I just realized I don't actually trust any of this anymore. And I've become incredibly I read and I no longer read believe what I read on the internet. And that's very scary to me that is someone with my level of sophistication who I curate my news sources aggressively, and I don't believe the things that I thought I curated well. And I think a lot of people in the coming months coming out of this crisis are going to look back and say, wait a second, didn't that person say that? And it didn't play out this way. And they had so much conviction. And I made these life decisions about X and Y based on that. And they're going to feel really deeply hurt. And they're going to just come to be a lot more skeptical of the institutions around them. And so I think kind of the biggest kind of meta takeaway of this crisis is going to be just a general lack of trust in institutions and people wanting to be more self-reliant to the best they can be. And that's why I'm so excited to be in crypto today, is because this is the first set of technologies that the explicit focus is on making people be self-sovereign and be able to verify facts around them. Now, verifying people are lying versus not is a very hard tech problem, but still being able to know you have some more certainty around you own your own data. It is what you said it thought it would be, basic just in integrity. Crypto, these technologies enable that. And so I'm very excited to kind of see that this ecosystem blossom kind of coming out of this crisis.
Guys, thank you. Appreciate it. We're out of time. We got the next panel coming up. So backstage, they're yelling at me to get off stage. Normally, we could just stay on stage, but here I bet they just press a button and we're all gone. So, and it's a really good panel coming up. So I want to thank Wave for putting this on. I want to thank all of you guys for doing this. Pleasure to see you all.
Thank you for the moderating.
Thanks, Mike.
Thank you.
Thanks for the last minutes up. I appreciate it.
Bye.
Bye, everyone.